Hello and welcome. My name is Daniel. This is a 10-minute stock pitch. I should call it 10-minute-ish stock pitch. I don't actually have a timer running, so I usually just kind of make the video and hope it's somewhere around 10 minutes. If it's 15 minutes, maybe I'll consider re-recording. But, you could also watch the video on 1.5 speed or something. Uh, Maybe I talk a little fast, but you'll be all right. So I wanted to do just a slight intro video here, roughly what I'm going to be going over, um, and just kind of some clarifications of what this is for, what this is not for, that kind of thing. So uh, basically, what I'm going to be doing here is I can just kind of pick stocks, and I just want to do a 10-minute quick little pitch over stocks that seemed interesting. Now, I have different categories. I have interesting, we have very interesting, and we have not interesting. Most likely, they're going to fall into those categories. There's technically a skip category, but I don't really see the value in creating an entire video off of a company that's a skip. So the chances that I'm going to do that are pretty minimal, unless some people like really specifically want me to do a certain stock, and it ends up being a skip. I guess I could do that, but yeah. So just in general, and I will change these around, if I do some bank stocks or, there's different styles of stocks. I may change this around a little bit. But essentially, you know, I kind of base my interesting factor off of this free cash flow plus growth, and then as well the kind of score I'll get here generally from a company. Um, and then I do, as I'm looking at the company, I will kind of translate that into what seems like relative near term growth opportunities. You'll see, uh, take like a Tesla for example, or I did a commodity company. Free cash flow plus growth was high, management score was decent, right? But it was interesting. I didn't get into the very interesting category because I know that near term their sales are falling really rapidly and things aren't going so well. So, even though some trailing free cash flow plus growth numbers look good and some of these, business characteristics look good, it's not a very interesting because there's not a lot going on for it in the near term. Everything is negative in the near term, right? Because obviously, as an investor, you're going to be looking at the future, and that's what the most important thing for when you're buying a stock is. The past can be as cool as you want, but if the future is not good, um, you're kind of wasting your time. So I'll go over this generally. If you want to see a better kind of larger example, I did Apple and I did Tesla. I didn't do a lot of research on them. I just did it really quick, just to give you an example of companies that you would probably know, just to see how I rate them and how I think about these things. Because I'm just going to go over this very quickly here. I usually keep a ticker symbol right here. This number means nothing if there's ever here. Don't worry about that. That's just for my calculations. And then I'll keep the score down here. So free cash flow yield current. This is current year free cash flow yield. So this is free cash flow per share divided by the current price at the time that I did the video. Free cash flow yield average is going to be the average free cash flow yield over the last 5 years, divided by the average price over the last 5 years. Now to simplify, doing average price over the last 5 years, um, I don't. I'm not using a weighted average or anything like that. Um, I'm just doing high price over the last 5 years and low price, and the middle of those two, just to simplify things. Also, so I follow kind of a similar pattern here with growth, but it's growth and earnings of the current year. So, current full year that I have data for, I'll be taking, earnings growth year over year, and then I have 5-year average earnings growth year over year. Now, this one I'll probably change the most if I'm doing like bank or insurance stocks or something. I may have to change this up a little bit, as well as with the free cash flow, because those numbers don't, like, free cash flow plus growth isn't really something you would do with a bank stock, because you don't really measure their free cash flow. It swings a lot and doesn't really mean very much. So sorry, I have a cat attacking me right now. So yeah, so that those will give me. I do the average. This formula here is average of this plus average of these two. Um, so I wanted to, I wanted to give a large precedent to most recent statistics, but while also keeping in a factor of average, 5-year average statistics for different things. So that'll fluctuate as it is, and if there's any like very large differences, like when I did Tesla, for example, one of their years of earnings growth was like 400% or something, and it threw off all the numbers. So that's something I may say here or there. I may actually, edit or smooth out the data if there was something uh, really unrelated uh, to business that just throws it off so much it's not useful. So, we'll take that as it goes. Um, Business. This is just a general score on how I feel about the economics of the business. This can be. It's not. I won't say it's not like a high gross margin is a better business, right? But a high gross margin with little volatility is almost always a good business in some respects, right? Um, but there's a lot of other characteristics that come, from myself running businesses that I know and other things. And so this would just be a general feel on whether or not I feel this is a good business. It's one out of 10 score. 10's a better business, one's a very terrible business. Uh, I probably won't do any ratings on companies with a one of business, but there's maybe some commodity things or something that pop up from time to time that may look interesting because of some near term situations. So I might talk about that. Um, Moat. This is more about the competitive environment of the business. Um, this is probably one of the more difficult things for me to do. When I'm just doing a 10-minute pitch of a company, because this depends on the characteristics of all of the other companies that they interact with, and for me to give you all that information would be difficult. So, take this with a low confidence interval, but this is just from what I know about the business, from reading about them, and briefly looking at their competitors, um, and maybe some um, customer retention rates or net promoter scores or um, you know, uh, industry penetration things that I can find that the company available gives me. So this is going to be perfect. It takes a little bit larger of a study over the other companies to really get this correctly. Uh, so take this number with a grain of salt. Cheap. So the cheaper the company it is, the higher the score. If it's a 10, I mean, a 10 is probably a company that's like 1 to 2 PE. Um, those are very unlikely scenarios. So one of the things that I mentioned when you're looking at this total score, this is this is basically all of these scores added up and then divided by a total score possible of 40. Now, if a company has a good business, has a great moat, has great management behind it, the fact that the chance that it's going to be cheap are like nothing. So the score will basically never be 100%. So you have to kind of take that into account. I use 50% as a gauge. Say anything over 50% is probably usually investable outside of special situations, right? So yeah, because it'd be very rare that a company would have an amazing business with a great moat, a great management, and it's super cheap. So, um, you know, all things considered, the cheap number uh, should be usually lower if these are higher. Um, so there's just that kind of balancing act that the stock market normally does, just by its nature, that would cause this to never be 100%. Anyways, so moving on to the management figure, this I primarily look at capital allocation. I also do read the conference call transcripts, so anything I can kind of read between the lines in there, I may include. Again, this is just a very crude thing. I'm not going over 10 years of management history. I'm not pouring over all the possible um, filings and everything. Usually, I'm going to be reading. I'm going to be reading at least the most recent conference call transcripts. I'll run through the 10Q, and then I'll run through the parts of the 10K that I want to find, and I'll probably skip a lot of the stuff that I know I can skip for sure. Um, and then I'm looking at the data I can pull up on QuickFS. So that's kind of what I'm looking at when I'm looking at these. So take them with a grain of salt. It's usually very kind of quick and dirty. I'll probably tend to. You probably won't ever see any companies with a low management score that I put on here. It's tough for me to see a company that has bad management and then want to like pass it over to someone. So the chances that this will be under a 5 is probably low. Also, um, speaking, uh, very badly publicly about, you know, somebody who's spending their 80, 90 hours a week running a business is kind of disrespectful. So I would probably tend to steer away from giving this a pretty low score. So just keep that in mind. If you see like, oh, he's always doing that high, well, it's more like I'm not gonna actually put a company on here that I think really, really badly about the management, because a good management can help out and turn around and make good situations for even a bad business that's struggling. So, I tend to favor companies with good management. So you'll always see the score probably in the higher range. Anyways, that's it. Um, that's basically kind of just want to give you a little bit of the rundown. Again, you know, interesting, not interesting, very interesting are going to be the different kind of grades I give here. Anything here over 50% is probably investable, and then free cash flow plus growth can give you an idea of of the cash that the company could have available to grow and build things. So thank you very much for watching. Let me know if you have any questions, and that'll be all.